Hello everybody and welcome to Innovesting. In this channel, we talk about and analyze the disruptive, innovative growth stocks listed on the ASX and US stock exchange. Unlike traditional stock analysis, this channel touches on the science, technology, and trends behind these companies to help you understand the problems they're trying to solve, their competitive advantages, and how disruptive can their innovation be. Today, we're talking about the Hazer Group, a renewable energy company focusing on commercializing the Hazer Process, which is a unique, innovative way to produce hydrogen and graphite at low cost and low emission. Before we continue, just note that this video is for informative and educational purposes only. All I'm doing is just sharing my personal research and opinions, so please do your own research and due diligence before taking any actions based on the content in this video. Also, I'm not an expert in this field, so if anyone believes this video contains inaccurate or incorrect information, please let me know in the comments below. Throughout this video, you'll see some gray-colored in-text referencing that will tell you where I learned these information from. Before we talk about Hazer, we need to understand the background of hydrogen. Currently, fossil fuels are the main energy sources in the world, and we all know that's contributing a lot to global warming. Hydrogen can be an attractive energy source for several reasons. It has no carbon atoms, so using it won't cause any emissions. It can be stored and transported, and also it has the highest energy content than any other known fuel in gas phase, which I believe most hydrogen applications will use hydrogen as a gas instead of liquid. In the National Hydrogen Roadmap published by CSIRO, it was mentioned that hydrogen has 4 main use cases. It can be used in industrial applications, for example in ammonia or steel production. It can be used as an energy storage, for example to capture any excess solar or wind energy. It can be used to generate electricity in fuel cells to power fuel cell electric vehicles, and also it can be used as a source of heating. Currently, 95% of the hydrogen produced in the world is through a process called steam methane reforming. This is the most developed technology. It can produce hydrogen at high purity, high quantity, and at a low cost. The problem is with every ton of hydrogen gas produced, 9 to 12 tons of carbon dioxide is also released to the atmosphere. So as you can see, although using hydrogen won't cause any emissions, producing hydrogen will, and that is currently a limitation of hydrogen. Emissions can be reduced by carbon capture and storage technologies, which involves capturing all the released carbon dioxide and storing them underwater, underground, or into some human-made reservoirs. This can potentially absorb up to 85 to 95% of carbon dioxide emissions, but it has additional consequences. It adds additional costs to capture, transport, and store the carbon dioxide, and also leakage of carbon dioxide can damage plant life and marine life. The Hazer process is a form of methane pyrolysis. This process involves using methane from biogas or natural gas as a feedstock. Under the help of a catalyst, in this case iron ore, the methane molecules will be broken down into hydrogen gas and solid carbon. The Hazer process will then turn the solid carbon into synthetic graphite, which is a valuable byproduct. Because the carbon is captured and transformed into synthetic graphite as opposed to released to the atmosphere, theoretically, the Hazer process should be a zero-emission process. If biogas is used as a feedstock, the company claims that the process can reach negative carbon emissions. The Hazer process started off in a lab in 2007. Over the last decade, they've scaled up their technology, established several collaborations, and finalized an agreement with the Water Corporation to build their first commercial demonstration plant. This plant will use the biogas generated from nearby wastewater treatment plants as a feedstock, and it will produce 100 tons of hydrogen and 380 tons of graphite every year. Once that happens, it may help Hazer Group attract some customers and establish commercial agreements. Currently, Hazer Group has around $28 million of cash and cash equivalents and around $7 million of short-term liabilities. That returns a healthy cash ratio of 4, indicating that Hazer Group is more than capable of clearing their short-term debt. Because Hazer Group is at its pre-commercialization stage, they don't have any sales income. Most of the cash is generated through issuing shares or receiving funding including ARENA's funding of up to 7.9 million Australian dollars over 3 tranches. Hazer Group will only receive these funding if they can accomplish the milestones set over each tranche. This will help Hazer Group feel more incentivized and motivated to build their plant and ensure successful operations. Now that we understand the background of Hazer Group, we can look into the competitive advantages. Compared to steam methane reforming, Hazer's technology has much lower emission, because instead of releasing any carbon to the atmosphere, the company can capture the carbon and turn them into synthetic graphite. The company also claims that the Hazer process is a low-cost way of producing hydrogen and graphite. We don't know exactly how much is the production cost, but we do know that synthetic graphite can be sold at between $7,500 to $20,000 per ton, and that can be used to offset the price of hydrogen. On top of that, Hazer's synthetic graphite also benefits from the low cost and low emission production. The usual process of producing synthetic graphite is highly energy intensive. It can also release carbon dioxide and other toxic emissions such as sulfur dioxide, nitrogen dioxide, and also PM10. Hazer isn't the only company working on methane pyrolysis, but it seems to be ahead of most of its competitors. A research paper published by Schneider in 2020 listed several other methane pyrolysis companies, and I Google searched each one of them to get a better understanding. Most of these companies still seem to be at a lab scale or pilot plant scale, with the exception of Monolith Materials, who already has a commercial plant. But what's unique about Hazer is that it seems to be the only company that can produce synthetic graphite as a byproduct. The other companies can produce some sort of solid carbon, which can be sold, but it's much less profitable than synthetic graphite. Besides their technology, I think Hazer's management team is also quite fascinating. Almost every single person from the management team have more than 20 years of experience in a relevant field. 3 of them have PhD degrees, including the CTO, who was a key researcher of the Hazer process all the way when it started from a lab. It's always good to see someone sticking around with the Hazer Group for such long periods of time. To me, that just means that they truly believe in the technology. There's also a lot of engineering expertise among this team as well. The CEO has a Bachelor's of Engineering, the Commercial Manager has a Bachelor's of Engineering, and the COO has 20 years of experience as a mechanical engineer. I think that all these engineering knowledge and expertise will be crucial to the success of an early-stage technology company like the Hazer Group. Besides looking into the technology and the management, it's also important to consider the market demand for Hazer's products. Many countries are starting to see the potential value of hydrogen, and they've started developing hydrogen roadmaps. Australia has a national hydrogen roadmap developed by CSIRO, which outlined the many use cases of hydrogen. But from what I can read, it lacks some clear goals and milestones, so it's difficult to tell when can we start seeing the growth of hydrogen and how much would it really grow. That's just my opinion though. If anyone else read the National Hydrogen Roadmap, let me know your thoughts in the comments below. In Asia, both Japan and Korea have developed hydrogen roadmaps, with Japan aiming to have 900 hydrogen refueling stations by 2030, and Korea aiming to build 1,200 hydrogen refueling stations and 6.2 million fuel cell electric vehicles by 2040. In Europe, both Germany and France are aiming to have 5 gigawatt electrolyzer capacity for hydrogen production by 2030. For context, 1 gigawatt is equivalent to more than 3 million solar panels. Hydrogen has many use cases in industrial applications. Currently, more than half of the global hydrogen supply is used to produce ammonia, which is mainly used for ammonia fertilizers in agriculture. As the human population continues to grow, there will always be a strong demand for ammonia and hydrogen to feed the growing population. A growing use case for hydrogen is in steel production. Currently, steel production uses a lot of fossil fuels, but an emerging technology called hydrogen direct reduction can potentially replace the fossil fuel with hydrogen. Several research studies have already shown that this process will be both economically and environmentally feasible. A German steel production company called ThyssenKrupp, who claims to be one of the world's largest steel production companies, have successfully demonstrated steel production using 100% hydrogen, and they're currently scaling up their technology. hydrogen has many other use cases as outlined in the background, but going over them will take too much time. Instead, we can now focus on Hazer's byproduct, synthetic graphite. Just like hydrogen, synthetic graphite has many applications as well. Its main application is used in manufacturing electrodes for electric arc furnaces used for steel production. These electrodes are expendable, which means as long as there is a demand for steel, there will be a continuous demand for these synthetic graphite electrodes. Besides these electrodes, synthetic graphite can also be used in chemical applications, for example in making lubricants. They can be used in healthcare, for example in heart valves and other medical devices, and they can be used in lithium-ion batteries. A growing market for these lithium-ion batteries is the electric vehicle market. The anode of these lithium-ion batteries can be made from either synthetic or natural graphite. Although synthetic graphite has better properties, the market still prefers natural graphite mainly because the cost of synthetic graphite can be twice as much as natural graphite. However, the Hazer process can produce synthetic graphite at a low cost, and that can remove the cost barrier for synthetic graphite, potentially making Hazer a top candidate for providing synthetic graphite for lithium-ion batteries. So as you can see, it seems like both products of Hazer, hydrogen and synthetic graphite, have a large market demand and will have a growing market demand over the coming years. When researching into innovative growth stocks, I always look into how disruptive is their technology. According to ARK Invest, a technology is considered as disruptive innovation if it can meet 3 criteria. For those of you who don't know what is ARK Invest, they're a fund management company investing solely in disruptive innovation. Their actively managed ETFs have returned more than 100% last year. Personally, I like what they do, and I like to use their criteria in my stock analysis as well. Their first criteria is that the technology must experience significant cost declines and unleash waves of demand. This seems to be happening for hydrogen and several of its components as well. You can see the table on the right. The cost of fuel cells have been decreasing over the last decade, mainly due to research and development outcomes. The cost of hydrogen production is also expected to decrease, with Australia targeting a green hydrogen production cost of only $2 per kilogram of hydrogen. The cost of hydrogen refueling stations will also decrease as more of them gets built. The second criteria of disruptive innovation is that it must cut across sectors and geographies. We've already seen in earlier sections the many use cases of hydrogen and synthetic graphite in different industries and applications, and how different countries have already published hydrogen roadmaps. The third criteria for disruptive innovation is that it can serve as a platform that can benefit and help build additional innovation. This was a bit difficult to research, but from what I found, the number of research publications and patents around fuel cells and hydrogen have been increasing over the last 2 decades. Just a note for the graph on the bottom right, there's a big dip in the number of patents published for the years 2018 and 2019. The researchers explained that at the time of doing this research, most patents filed in those years probably didn't even get published yet. As engineers and researchers develop more innovative solutions for hydrogen and fuel cells, that could potentially unlock more markets and applications. Combined with the decreasing cost and increasing demand, we could potentially see Hazer Group and its products disrupt the market. Whenever I research a company, no matter how bullish I think it is, I'll always look into the risks, limitations, and opportunities. Right now, Hazer Group is constructing their commercial demonstration plant with a production output of 100 tons of hydrogen annually. That is not a lot. There are currently hydrolysis projects under planning or construction that can produce up to 9,000 tons of hydrogen every year. We also mentioned earlier that Australia is targeting a green hydrogen production cost of $2 per kilogram. If that happens, hydrolysis projects can be a serious competitor against Hazer Group. Hazer Group really has to scale up and expand their technologies in order to stay competitive. Fortunately, in an interview with Hazer Group's CEO on Share Cafe, I heard that they've already been granted patents in Australia, New Zealand, and Singapore, and they have 1 patent granted in the US already. So it's good to see them planning to expand their technologies internationally. Despite the excitement, it's important to note that at this stage, no commercial agreements have been confirmed yet, and Hazer Group's technology is still at an early research and development phase. I think it could still take years before Hazer Group's technology becomes really profitable. An uncertainty I had was, according to Hazer Group's official website, they claim that they can reduce at least 50% emissions compared to steam methane reforming. I'm assuming this applies to when natural gas is used as a feedstock as opposed to biogas. But still, if it only reduces 50% emissions, in my opinion, that's not a significant reduction. Remember earlier on, we mentioned that steam methane reforming generates 9 to 12 tons of carbon dioxide per ton of hydrogen produced, and 50% of that is still 5 tons of carbon dioxide. From what I read, other methane pyrolysis technologies seem to have zero emissions. From my understanding, and I could be wrong, the Hazer process itself has little to no emissions, but the energy and fossil fuels required to power the Hazer process is where the emissions come from. That's just my understanding though. Let me know your thoughts in the comments below. Finally, it's important to note that at this stage, hydrogen isn't widely used yet, but its potential is huge. And I think it's certainly exciting to watch for Hazer Group's pathway to commercialization in the coming years. So that brings us to the end of my analysis. Here's a list of sites where I learned my information from. All the academic journals listed here are open access, which means anyone can read them for free. Finally, I'd just like to mention that I use Self-Wealth to invest in Australian stocks, so if you're new and you want to get into investing, feel free to use my referral code in the description below at no additional cost, and both of us can get 5 free trades. Thank you for listening to this video. I hope you enjoyed the content. Please like, comment, and subscribe for more.